Thank you very much, President Lagarde. So now we can open the floor for our Q&A session and give the floor to the ECON members. Please limit your intervention to 2 minutes and do not forget to press the speak button before taking the floor. So we start with Sven Simon from EPP.
Yeah, thank you very much, Madam President, for taking time for this dialogue, which is, I think, extremely important, especially in times when the ECB takes measures which are controversial. I very much appreciate your open, transparent and dialogue-oriented approach and your smart information strategy. Thank you for that. Last week, the Bruegel Institute has published a report with the title, "Why has COVID-19 hit different European Union economies so differently?" In its analysis, the Institute comes to the result that the PEP, how you call it, has been successful in countering the risk that high public debt euro area countries would be cut off from the market if they attempt to expand their debt issuance to respond to the crisis. I think this is a big success for the European Central Bank, which should be communicated, and I would like to ask the Secretariat to distribute this analysis of the Bruegel Institute to the members of this committee. Nevertheless, it is important to continuously monitor the proportionality of ECB measures to its impact on the economy. In this spirit, I have 3 questions. First, how do you assess the impact of the PEP on housing prices, especially in countries with the highest relative increase in housing costs since 2009, such as Germany? Second, how does the ECB mitigate the risk of zombie companies developing, companies that have no viable business model but nevertheless or nonetheless survive due to cheap liquidity? And third, what steps, perhaps most important, has the ECB undertaken within its mandate to coordinate its monetary policy with the fiscal policy of member states? Are you satisfied with steps taken so far by member states to align fiscal and monetary impulses? Thank you.
Thank you very much, Representative Simon, for this triple question. On the first 2 that really impact on PEP, I would just like to remind ourselves that the purpose of PEP was threefold. We really wanted back in March, because that's when it started, we wanted to stabilize market as quickly as possible. And I think that we have very much achieved that, as is seen by the yield of the sovereign bonds, by seen as the spreads, and how much closer these bonds are nowadays. Second, we also wanted to ease our monetary policy stance to help counter the substantial downgrade to our inflation outlook that was caused by the pandemic. So both in terms of stabilization and in terms of monetary stance, I think that PEP has been extremely efficient and extremely helpful. The impact on housing is not something that we are indifferent to, because we are very careful as we look at the effectiveness and the appropriateness of all our monetary policy tools to the side effect. And we have not seen significant material negative side effect resulting from the use of PEP. Quite to the contrary. We think that the net impact of PEP has been largely positive. In terms of zombie companies, I think the same applies. We obviously monitor all that, and we know that there were indeed some companies that had some liquidity risks, and the concern was to make sure that these liquidity risks under which they were operating did not turn into solvency risks. But we do not believe that in terms of side effect of PEP, we have aggravated that particular situation. The coordination between the monetary and the fiscal authorities, I would rather call it a work that was conducted hand in hand. It is a very significant variation compared with the previous crisis, the great financial crisis, whether you look at 2009 or whether you look at 2011, the European sovereign debt crisis. There was not the same level of hand-in-hand work at the time. In this particular case, I think that all authorities, whether at the national level, at the European level, whether in fiscal terms or in monetary terms, really reacted very promptly and worked hand in hand in order to leverage each other's strength and efficiency. And I think that has been extremely helpful. Thank you.
Thank you very much. Now we move to the next speaker, Jonas Fernandez from SND.
Hi, welcome, President. 3 questions. First, you don't expect inflation rate to be close to 2% at least 2023. 3 years without fulfilling your mandate. And by the way, many more years without fulfilling it until now. Why don't you take more measures just now? Second, as you state, ECB is currently carrying out a strategic review. Are you looking at accountability aspects? What do you think about the revision of the mandate of the Federal Reserve in the States? And finally, last week, ECB defended a permanent version of the Recovery and Resilience Facility. Explain us your opinion about this possibility. Thank you so much.
Well, thank you very much for your questions. First of all, again, I would observe that all the tools that we've used in our monetary policy toolbox, starting with extremely low interest rates. I remind you that the DFR is at minus 50 basis points, that the asset purchase program was ongoing, and that we have added to that 2 major tools, if you will, TLTRO, in order to make sure that liquidity flew to the economy via the banking intermediation, and second, our asset purchase that was intended both for stabilization purposes and for monetary stance. And I think that on using all these tools in the toolbox, plus the collateral review that we conducted in order to enlarge the volume of collaterals that could be taken up, I think that we have had a very significant impact on the economic situation, on the credit situation, as well as on the risk of fragmentation. So clearly we are far away from the goal that we have, which is close to but below 2%, and we are not complacent about it. We have demonstrated that when it comes to recalibrating our instruments and changing its focus, increasing its size, we are always prepared to do so in order to deliver on our mandate. But clearly what we have done so far has been extremely, as I said, targeted, indeed temporary when it comes to PEP, proportionate, and we will continue to be very attentive to all the information that comes in a more reliable and solid way in the weeks to come in order to define what we do going forward. On our strategy review, we started just pre-pandemic, and we managed to conduct one key session that was a stock-taking exercise. And unfortunately, as the Fed did actually, we suspended the review and we just resumed about 2 weeks ago. And we will continue this process until completion, which is scheduled for September of 2020. That started way back and earlier than we had, and came with a conclusion which has been communicated by the chair of the Fed, in Jackson Hole in a speech that he gave at the time, which has been further clarified in the latest monetary policy decision that was rendered, and which clearly refocuses on the second of the two mandates that is pursued by the Fed, which is the employment, which is now defined in a slightly different way and in an asymmetric way. Now, clearly, we've taken that. The communications that surrounds this new determination, and it will be one of the elements that we will take into consideration in our own strategy review as we develop it. It's interesting to note, actually, that the forward guidance that has been in place at the ECB has very much been inserted into the Fed's new monetary policy, not verbatim, but very much to the same effect. So there is an element of borrowing from each other, and clearly the Fed has demonstrated that when it comes to forward guidance. The paper that you referred to, which was published last week by the Economic Bulletin of the ECB, if I recall, indicates that we clearly support the Recovery and Resilience Fund and the overall new generation EU package that was adopted by the European Council back earlier in the summer. And we believe that it has been a very strong component to restore the confidence in the European Union. And we believe that it's a political determination that was expressed in no uncertain terms, and that is demonstrating that the Europeans can actually decide to jointly borrow, to allocate funding between grants and loans in order to first of all, stabilize, and second, transform the European economy. And we've also noted in the past, and we keep noting, that joint fiscal approach is indeed very helpful and very needed in order to complement a monetary union. Thank you.
Hello? Okay. I'm sorry. Yes, now I give the floor to Luis Garicano from Renew.
Thank you, Chair. It's good to see you, Madame Lagarde. I hope you're doing well with these strange times. I don't know if you're there. I agree with you that the impact of the pandemic is highly uneven, and probably the recovery will be also very uneven, as you have said. I fear that it will be really persistent in a way that we have seen really large differences in growth in the Q2, for example, Spain 18% drop, Germany 10% drop, that seem to be probably likely to persist into next quarters and probably likely to feed into inflation expectations. My question concerns how the ECB will act in the face of these enormous disparities in growth rates and presumably in inflation rates into the future. I anticipate you will have more trouble maintaining cohesion among your board members. We have heard Mr. Panetta said last week that risks of overreaction in terms of monetary policy are much lower than the risks of a policy that is too slow or too timid to react to the worst-case scenario, while Mr. Mersch was pointing out that PPP and similar programs were exceptional, temporary, and the deviations from the capital key should not be extended. So I would like to ask you two questions on this topic. Would you be able to maintain and potentially increase even after the corona crisis is over in the new year, the differences in support that PPP, the PEP, provides to different countries in the EU, increasing as needed the deviations from the capital key guidance? How far can this support go? And second, how would you deal with differential inflation and deflationary threats in different countries? Will you be more concerned with countries facing downside deflation risks or overshooting inflation risks? How will you weight these differences, and how will you manage them in your monetary policy? Thank you.
Well, thank you very much, Mr. Garicano, for your question. And to your first question, yes, I'm doing fine. And certainly focused on the job and delivering as much as we can, and most at the ECB are doing fine as well. We have a few victims of the pandemic, but not too many, and we try our best to avoid that. So on the well, first of all, I'm not overly concerned about the fact that people can have slightly different views and opinions. As you know, I'm more of a consensus builder, but you can only build consensus if views are slightly different amongst members. So I don't encourage massive dissent, but I think that dissent and discussions are healthy amongst members of the executive board. I think what is important is actually once a decision has been made and once a majority has been established, then it's a question of discipline and staying the course and being together at that point in time. As far as the PEP is concerned and what we do with PEP, that particular program is, as I think I've said that before, as in its DNA, flexibility. And that's the key word that applies to the PEP. And I think we've demonstrated that flexibility both in terms of time. So we did front-load PEP when it was needed. Its flexibility in terms of asset classes as well. We went for corporate bonds, we went for commercial paper, which was not in the cards in the first place, and certainly not in that magnitude, and across jurisdictions. As you said, we did deviate from capital keys as and when it was needed and as was appropriate in order to respond to the goals that we had with PEP. So, of course, it is temporary, targeted. Indeed, it is a flexible instrument and has to continue to be flexible in order to respond to the situation and to the exceptional character of this situation. So the deviation from capital keys have varied over the course of time. They have narrowed recently, if and when there was a need because the situation would worsen or because there would be, again, a risk of fragmentation. I'm sure that the Governing Council would have the wisdom to apply this flexibility criteria in the three dimensions that I have mentioned: time, assets, and jurisdictions as well. In terms of inflation, one of the attributes of this close to but below 2% had to do with the fact that we had different levels of inflation between the various member states. And clearly we are guided by the euro area inflation. And while we're looking at each and every member state, it is the euro area inflation that actually matters for our monetary policy. We had last week a very interesting seminar on inflation developments and trends, which clearly have been changing and that we tried to analyze in details in order to really appreciate how these trends and how the measurements actually will matter in terms of defining our price stability objective. And this is part and parcel of the strategy review. We did not come to final conclusion on the occasion of that seminar, but it's going to be part and parcel of the overall thinking process around our strategy review. Thank you.
Thank you very much. Now I give the floor to Gunnar Beck from ID.
Thank you, Madam Chair. Welcome, Madam President. Good afternoon, Madame Lagarde. Sie rechtfertigen Ihre...
You justify your expansive ECB monetary policy by saying that it is an extraordinary means in extraordinary times. Now, I've got a chart here from De Gusser AG, and if you look at that chart, it will show you that the amount of money in the euro area, M1, since about 2003, that amount of money in the system has increased much faster than the GDP. Now, since the introduction of the euro, M1 has increased of the order of 500% compared to real GDP which in the euro area has barely risen at all. And since 2010, expansion of the amount of money in the system has accelerated, whereas growth has slowed. So one question for you on this particular topic. Are you able to give me a single example in all of history where a similar or barely comparable increase in the amount of money has resulted in real long-term growth in the future without massive redistribution from the haves to the have-nots in terms of assets and without reducing the value of assets? Thank you.
Well, thank you very much for your question. You know, it's a fact that M1 has increased. It's a fact that M3 has increased, and it's hardly surprising given the fact that we have used our TLTRO3 in order to make sure that actually credit flew to the economy and that enterprises could access loans and could finance their capital expenditure as well as their cash needs. So M3 is a reflection of that, and the fact that lending to the economy, particularly to the corporate sector, grew at plus 7%, which is more than twice the average that we had observed back in February, is a clear reason why we have seen that significant increase. Now, I just want to remind you that as far as monetary policy is concerned, we are guided by our mandate, and our mandate dictates that we address price stability. That is our mandate, and we measure that by reference to the inflation aim that has been defined back in 2003. And it is those particular principles that are currently under our strategy review and will be until completion of the process. But this is what guides us. It's price stability, it's the inflation aim that is associated and has been defined, and that's how we can be predictable and how we can actually help both the economy by means of more investment, by means of more jobs. And in that respect, I think that what we have just recently done has been measured against what if we had not done it. And it is clear that we have contributed over the course of this exceptional period to the improvement of the economic situation, and we have prevented a massive deterioration that would otherwise have been seen. Thank you.
Thank you very much. Before I give the floor to the next speaker, Bas Eickhout, I would like to remind that the papers that the expert panel has provided us, they also have some interesting analysis, also comparing what would have happened without this program. So there are some very interesting papers that could really help the members to go deeper into these issues. So thank you very much. Bas Eickhout from the Greens.
Thank you very much. Thank you very much, Chair, and thank you very much, President Lagarde, for being here with us today, sort of being here. I would like to talk about the green TLTRO, if you don't mind. So since the launch of the ECB strategic review, we have seen a growing debate on how the ECB could incorporate climate factors in the ECB's supervisory and monetary policy operations. As you are very well aware, since a couple of months, the EU has now adopted its taxonomy regulation, which provides a democratically constructed framework to define sustainable economic activities. And with that, a key obstacle is gone for the ECB to make its monetary policy operations more sustainable, since there is now a democratic mandate in this taxonomy. Now, turning to the TLTRO, there is a very interesting paper by Positive Money Europe and Sustainable Finance Lab. It's on greening the TLTRO program. So green TLTRO programs are refinancing operations where the interest rate that banks pay is determined by the volume of taxonomy-compliant loans issued by the banks. I think what you can conclude, and the report also very clearly shows that green TLTROs would contribute to achieving the ECB's primary mandate by addressing market failures that undermine the broader economic preconditions of monetary stability. Secondly, green TLTROs would support the ECB's effort to reduce environmental and climate-related financial risks built up in banks' balance sheets and thereby contribute to financial stability. And green TLTROs will help to align monetary policy with the ECB's secondary mandate, which requires it to support the EU's environmental objectives where it is possible without prejudice to price stability, which has also been discussed. I know that the report has been received also in Frankfurt and has been discussed. I would very much like to hear from you on this idea of green TLTROs. Do you think and do you confirm that this proposal is technically feasible? And secondly, since last year you told us that you would leave no stone unturned, are you considering to take the concept of green TLTROs in your part of the ECB's review later on? Thank you very much.
Well, thank you so much for your question. The very simple answer to your question is yes. Because you're asking me whether we would be prepared to consider this proposal as part of our strategy review. And the answer is yes. As you know, and as I've said in front of your assembly, climate change is a matter that has to be part and parcel of our strategy review, not because it is a secondary objective, but because of its impact on price stability, because of its significant impact on risk assessment and risk management. And the green TLTRO, as you called it, is a matter that is of interest and that we will look at. I think that this report is due to be presented rather soon and discussed, and I think that there will be a representative of the ECB who will be attending that presentation, and I'm very pleased about it. Thank you.
Thank you very much. Now we move to our next speaker, Dirk Epping from ECR.
Thank you, Mrs. President. The Dutch Prime Minister, Mr. Rutte, told the Dutch people that the recovery fund of €750 billion was a one-off operation. Now I read in the international financial press that the ECB is of the opinion that the recovery fund should have a permanent character. This means that the recovery fund will become the beating heart of a permanent transfer union, channeling money from the north to the south. Is that allowed by the treaty? Is that within your mandate as a central bank? The purchase policies of the ECB so far have already created long-term low interest rates, which reduces the capital of savers and retirees. Meanwhile, the ECB has purchased so much debt that its balance total is equivalent to 63% of the national income of the entire Eurozone. In the United States, it's only 36%. So, Madam Lagarde, is the ECB later on going to buy the entire public debt of Italy and Spain? I foresee, on the basis of your policy, that the Netherlands will have no other choice but to leave the Eurozone. Thank you.
Well, thank you very much, and I'm so pleased that the Netherlands is part of the Eurozone, and I hope it stays that way. Let me point you in the direction of the actual publication by the ECB, because there's nothing like the authentic an entire document as published and not as elicited and spun by any particular magazine or newspaper. And if you have a chance to read this box, which was published in the Economic Bulletin article last week, you will see that there is a clear reference to the fact that the New Generation EU is a one-off. So it certainly does emphasize the fact that it was also a one-off response to exceptional circumstances, which we, as so many others, have applauded and are encouraged by, given that it demonstrates the determination by the political leaders sitting around the table of the European Council to actually take the right measures to respond to the crisis. So it has nothing to do with what you've referred to in the beginning of your question, and I really very strongly encourage you to read this article, and I'll be very happy to actually send it to you directly so that you can have the original source. But far from us to have reached the conclusion that you've mentioned. Second, I just want to also slightly correct the numbers that you've used, because the actual balance sheet of the ECB is not in the range of the 65%, but it's 56% of the euro area GDP, which is indeed more than the size of the balance sheet of the Fed with reference to the GDP of the United States. But that's hardly surprising as well, because clearly the financial markets in the US is completely differently organized than what our organization is. And I would take this opportunity to stress that having a deep and liquid capital market that applies to the Union would actually be a good response to what is needed. Financing tools that are less necessarily reliable on the banking system and that can actually source financing from the markets. Thank you.
Thank you very much. Now, Dimitris Papadimoulis from GUE.
Κυρία Λαγκάρντ, σας καλωσορίζουμε και πάλι. Σας έχω ακούσει επανειλημμένα.
Madame Lagarde, I think you've already heard us say that the monetary policy is not sufficient to face the crisis, and in order to be able to do that, we need budgetary measures. And I think that that's entirely relevant. You yourself took measures which were necessary with an active purchase program. And so I think the question is how we can deal with a crisis which is creating greater inequalities and which is creating difficulties and calls for budgetary measures which are stronger and more reactive. The European Parliament feels that the recovery fund is a good approach, but the Parliament feels that it needs a budget spread over a number of years so that the recovery can be stronger and fairer. And I would like to get your impression about the Parliament's position with regard to budgetary policy, which is different from that of the Council, because we're just at the start of those negotiations, and then the scandal after the Panama Papers. We've got new revelations now which are seeing the light of day with regard to money laundering involving European banks, which people are continuing to support generously. And so I just wanted to ask you, as a person responsible, what do you think are more effective measures that could be adopted to deal with financial crimes, which is something that European citizens are paying for, and taxpayers? And then the third question, I often hear you talk about the need to strengthen democratic control of the ECB. That is something that we want to see as well coming from the Parliament. On the 23rd of September, the Bruegel Institute published a document with positions to strengthen control of the ECB. Have you had a look at these proposals, and what do you think of them? Would you be willing to accept them? Thank you.
Thank you very much, Mr. Papadimoulis. On your first question, as I have mentioned, it has been extraordinary in this particular crisis to see how monetary policy and budgetary policies, meaning fiscal, at the national as well at the European level, have actually worked hand in hand. I think it's attributable to that cooperation that the measures against the exceptional circumstances and the economic crisis that Europe has gone through was efficient. Clearly, you members of parliament are playing a critical role in relation to the MMF, in relation to the Recovery and Resilience Fund, and particularly your ECON committee is right in the center of those debates. One of the values of the MMF is precisely that it extends over a period of time, and it plans for not only a response to the exceptional circumstances with a view to stabilizing the situation, but it's also planning into the future of the European Union and what focuses it will have going forward, whether it's green, whether it's digital, and whether it's allocated to different funds as a portion of the next generation EU fund is intended for. Hopefully, this budget that you are discussing, that you will be reviewing and voting upon, will allocate sufficient investment into those strategic areas that will actually transform our continent with a view to making it fit for purpose in this different environment. On the money laundering issue, clearly money laundering and combating the financing of terrorism is a matter for national authorities, and it's not an area where the European Central Bank actually plays an institutional role. And I welcome the fact that the Commission has made some proposal in order to establish a level at the European at a European level at which AML and CFT could be actually better coordinated and better chased in order to eradicate those criminal behaviors. Democratic control, I'm not sure that I'm totally comfortable with the word control. I think that accountability is the one that best describes, as provided under the treaties, the relationship that we have between us, between the European Parliament and the European Central Bank. I think the concept of control, for me, is more associated with the European Court of Justice, which has ultimate control from a judicial and legal point of view over what we actually do. But I'm fully supportive of measures that have been taken and that we can continue to develop as our activities changes in terms of accountability between our two institutions. Thank you.
Thank you very much. Now, Isabel Benjumea from EPP.
Ms. Benjumea, can you press the speak button? Thank you.
Yes. Thank you so much, Madam Chair, and thank you so much, President Lagarde, for being here today. I will continue in Spanish. Muchísimas gracias.
Thank you very much for coming to report to us today before our committee. I think it's very important not only to be accountable to the Parliament and us as representative of the citizens, and I think it's very important. I'm glad you've talked to us about all the transparency efforts you've made. It's very important. Now, I have a couple of comments. First of all, with respect to maintaining the interest rates and the PEPs, the Asset Purchasing Programme. How is it going to have an effect on European savers? Because there is a risk that with the lack of yield with these interest rates, that savings might leave the EU. So I'd like to ask about that. And then a question about SMEs. I consider it's very important to take new measures, not just the ones that have been taken, to facilitate access to loans for SMEs. But it's also important for them to have access to capital. You recently talked about the Capital Markets Union. I'd like you to say something more about the steps needed for this to become a reality, the CMU. Not only that SMEs may have access to capital, but that savers can also have a broader portfolio in which to invest their savings. Thirdly, I'd like to ask you about the fiscal measures that Member States are taking at the moment, as to which ones you believe are appropriate and which ones are not. The impact on savers of keeping interest rates and the asset purchase programme, that was my first question. Secondly, SMEs, access to capital, and then what's on offer on the CMU. And thirdly, the measures taken by the Member States, whether that can be improved or extended. Thank you very much.
Well, thank you so much for your three questions. First of all, the negative interest rate on ECB's deposit facility, which was introduced way back in June 2014, and which is currently standing, as I have mentioned, at minus 50 basis points, 0.5%, has to be seen against the background of a longer term of lower natural rate of interest in advanced economies. So the ECB is aware that a prolonged period of low interest rates can have side effects and can have an impact on the saving behavior of some of the economic actors. I have to tell you that we would very much like to see those savings that have accumulated, particularly during the pandemic lockdown period as a result of forced saving, but also more recently as a result of precautionary saving, be actually diverted to either consumption or investment. So it's not so much the fear that it would, fly to more rewarding investments going forward. It's more the desire to see it being diverted to consumption and investment that we have at the moment. But, clearly those risks of side effects that I've just mentioned, there are also some very important positive effects of an accommodative monetary policy stance. And, the ECB's monetary policy has boosted employment, has supported non-financial corporations' balance sheets. Higher employment has also been the result of the monetary policy that is characterized as accommodative. So it cannot be just a one-sided analysis of what we're doing. It's multifaceted, and in the main it has been a net positive based on our experience of negative rates. Now, your second question dealt with the SMEs' access to finance. And I have to tell you that since mid-March, we have actually taken multiple measures in order to enlarge access by SMEs, by self-employed people to the lending that is available at very, very attractive rates under the TLTROs in particular. And we have accepted credit claims of a much broader nature at the request of many of the national central banks in the euro area. So I think that SMEs, self-employed, families, of course, that want to or need to have access to finance can certainly find this financing available, and we've accommodated that as much as we could. I would like also to mention the fact that by having banking intermediation, we are actually facilitating access by SMEs, because in the main, the large corporates can access the capital markets, which is not the case for SMEs, unfortunately. So the fact that we have solicited, encouraged, incentivized banks to actually lend to the economy has de facto been directed to SMEs, in addition to the additional credit claims that I have mentioned earlier. The fiscal measures that were taken, just as an observation, we consider that on average it's no less than 4.5% equivalent GDP that has actually been expanded by the fiscal measures that have been decided by the national member states in the last few months, which is significant and a solid response to the exceptional circumstances that we are facing. And that's not to mention the roughly 20% equivalent of GDP that has been offered as guarantees, particularly for the loans. Is that enough? I think the key point now is to make sure that this fiscal support is sustainable, because we're clearly not out of the woods yet. And, the recovery has to roll, not to stall. So my hope is that the measures that are going to be taken going forward in the various budgets that are submitted, and we are beginning to see this here and there, is that fiscal support is sustained, is continued, and that authorities appreciate that we need to continue to work hand in hand, fiscal and monetary, national and regional at the European level, in order to respond to the circumstances. There will be a timing issue, there will be a synchronization issue between the gradual pickup of the recovery, if it is well sustained, and the gradual withdrawal of some of those exceptional supports. But we are not there yet, in my view. Thank you.
Thank you. Thank you very